we do. And folks, if you've ever wanted to be in a position where your understanding goes to the next plateau and understanding the why behind the what, and making sure that from this point forward, you're going to have the liberty, you're going to have the freedom to expose your friend, neighbors, and to relatives to information that really, literally has just been hidden in plain sight. So tonight, we want to kind of expand your mind far beyond what you've been experiencing from a trading experiencing standpoint. We want to give you the nuggets and understanding how, if you stay committed to this process, if you stay the course, if you absorb this information tonight, mark this date and time, the 8th of October, 12 months from now, you will literally be able to write your own financial narrative. And that's really what tonight is really about. Being able to erase any murky line that you may have when it comes to not only trading, but the understanding and the fundamental concept of what this industry entails. Myself being in this space in banking, mortgage lending, commercial lending, combined with 20 plus years of experience, and having been able to be behind the veil of understanding what institutions do, and then, compounding that with our business partners, Ms. Dyer, which you will hear from shortly, financial advisor, MBA in business administration, and then tonight, to tie it all together, having the opportunity to hear from Dr. Craig Bythewood, who literally has a PhD in finance and economics, and fortunately for all of you, having his intellectual power over 25 plus years as an academician, as a consultant, as a CFO, but most importantly, having the opportunity to glean and learn from an individual who literally wrote his PhD dissertation on banks, mergers, and acquisitions. So with that being said, folks, I'm just going to pass it over to our coach and mentor this evening, our very own Tasha M. Dyer, retired United States Major, the trade whisperer herself. So put your seatbelt on, grab your pen and paper, because I promise you, your perspective and understanding of trading and what you've experienced thus far will never, ever, ever be the same. So with that being said, I'm going to turn the call over to our business partner and our coach, master educator for this evening, Ms. Tasha M. Dyer, the trade whisperer. Ms. Dyer, are you on the line?
Yes, I am here. And thank you so very much, Mr. Rogers, for that warm welcome. Thank you, Mr. Phillips, for what you all do. And so, yes, I am here. And ladies and gentlemen, I'm excited because when you get a different set of information, you actually begin to look at things differently. So Mr. Rogers just gave you our backgrounds, right? Him being in investment banking, me being a financial advisor, right? So you have all the information, you understand what it is and what you've embarked upon. So, and then Dr. Bythewood, PhD in finance and economics. But I really want to dive deep. See, with BYOB, this is all about you learning the skill set. It's all about you think like a bank, act like a bank, or you become your own bank. And it's literally all about you removing the blinders. It's all about you taking it to the next level, because this information that we have has literally been hidden in plain sight. So it's been happening. It's been going on consistently. But where we are is we have not had the opportunity to take advantage of it because we didn't know about it. And when you erase the narrative that's being painted out there that, quote unquote, they don't want us to have it, when you're referring to the wealthy or other people don't want us to know about it, the reality is that's not accurate, because the information is there. It's just, do we tap into it? And so now you're on this call because you made a decision to do something different, where you enroll, learn, and profit, right? You enroll into the academy, you learn the skill set, you learn how to utilize the tools, and you put yourself in a position of profit. And that's what we're here to talk to you about tonight, because it's not that anyone is keeping it from you. It's the fact that we are sold something. And Dr. Bythewood so eloquently always talks about the person you normally get financial advice from is the person that you're giving your money to. And that's the truth. So it's really, you have not enrolled and you're a guest. Tonight's call is definitely going to shift your mindset and change some things in how you view. Because when you sit down and you know that the average person, to be able to take advantage of this platform, to be able to take advantage of anything, the average person, right, in order to take advantage of a true investment, you have to make over $50,000 or $60,000 a year. So my clients, when I would sit down with them, they literally had to make over $60,000 a year. Now, where do you find those clients? How is that possible when the average person makes about 32? So where do you find the information? Where do you find the people that find the money to put into these investment accounts, right? So we see it, and we see it all the time. But the person taking your money is giving you financial advice. And so I want you to understand the difference between investing and trading. Just like Dr. Bythewood will tell you, I'm not anti-bank, I'm just pro your household. So I'm not anti-investing per se, but I'm pro your household, I'm pro education. And we often get so caught up on we want to be educated, but the reality is what are we being educated upon? What is it exactly that we are actually being educated upon? So it's about having the right information, not just some information, but the right information. So when you look at investing versus trading, right, you understand that investors and traders, they both are seeking profits in the financial markets. And understand how big the financial market is. I really, really want you to understand how big the market is. And the financial market is literally, right? The financial market is literally where we're talking about $6.6 trillion a day. And I'm not even including cryptocurrency. So this is the same market you are in, regardless if you're investing or trading. But the difference is what perspective are you taking advantage of it from? What perspective? So both investors and traders also seek profits through market participation. They both do. They both do. And so you have to understand that when you're looking at this and when you're trying to understand, what perspective are you looking at it from? And we're going to break that down for you tonight. So understand that when you invest, you expend money, right, with the expectation of achieving a profit. So you are literally looking at an investment where you're talking about 10, 20, 30, 40 years that you hold it. And then you'll get a nice little check every month, right? Or whether it's for a college fund or whether it's for your actual retirement or whatever it's for, that's what you're looking for. And the goal for that is to gradually build wealth over an extended period of time. And so how do you do that? You do that through buying and holding. I want you to understand, you buy and you hold. So that you buy and you hold, whether it's stocks, mutual funds, bonds, whatever the case may be, whatever those instruments are, you buy and you hold. And then when you understand you hold, that means that transaction is not complete. Okay. And that's why when most of us imagine and view the stock market, right, we know that we get excited when it goes up, when the market moves up. But if you were just investing, it's absolutely no way you would have gotten excited today when the US 30 dropped. So it's absolutely no way that you would have gotten excited. So this is what that is. This is what that is. And holding. So when we talk about ride the wave, this is a wave that you do not want to have to ride. Or if you do, you have to have another plan in addition to this, right? You have to have that. So what is a stock? That's a financial instrument that represents ownership. That means that you have to buy something. You have to analyze the company. You have to see what you're buying and just pray and hope and hope and pray that you made the right investment, that you didn't get in too late, that it's still a good investment. So you're doing so much research for that particular company that you're just praying that it rises in value when you're ready to close that transaction. Now, I'm not going to get deep tonight into dividends. I'm not going to get deep tonight into all of that because this can go a lot deeper than what we're going to cover tonight. But tonight is just to give you the surface and to help you understand what it is and the difference between the two. And then a mutual fund, right? Because a lot of people cannot afford the liquidity that it takes to purchase a stock, right? Especially if you're looking for something to rise in value. So that mutual fund is just a pool of money, a pool that you have those many investors, right? And so you own a fraction. So it's not that you would get that stock like you will when you actually purchase that stock, but now with the mutual fund, you actually own a fraction. And you'll see why you have to keep buying over and over and over again each month just to make a profit. Now, the investments, like I just told you, they're held for a long period of time. They're actually held for a long period of time. They're held for a long period of time. So you're talking about a few years. You're talking about, just a long time. And what's sad is when most of us, like I'm U.S. Army Major retired. I retired from the Army, which means I get my check. But those that are actually joining the Army, that's one of the things that many people have often been so excited about. But now they're taking that pension per se, and they're putting some of it into the stock market where it's fluctuated over the market. So now instead of that guaranteed check, and they all paint a picture of how great and wonderful this can be for you. But what you're doing is you are exposing yourself to the market. You're actually still exposing yourself to the market. And the market fluctuates, right? Those investors, do you honestly believe that they're not trading? Do you honestly believe that they're doing the exact same thing? No, they're there to profit. They're there to make money. That's what they're there for. How you say you honestly don't even look at your stocks anymore.
Something like that.
I don't blame you, right? I don't blame you. And when I say that because this literally it fluctuates. It fluctuates. So the things that are happening in the news, right? We talk about Bloomberg. We talk about watching the right news and cutting off the other news. All of those things, the tariffs, Brexit, you see how it moves with our trades. But imagine you haven't closed a transaction, because we had a lot of people in profit today, a whole lot of people in profit. And because you understand how to navigate through the market, or you're learning how to navigate through the market. So, but you're still able to cash out with that. But when you're looking at can my actual investments handle this? Can your investments handle 1,000 point drop without you really being emotionally tied or affected by that? That's what this is. That's why you really have to understand the difference between investing and trading. And so that's why, and because you don't have the liquidity, we just thought you got to buy low and sell high, right? But because you don't have the liquidity, because of that, a lot of people now do what's called mutual funds. And those mutual funds is where it grows over time, but you got many different stocks that are put into a mutual fund. So you're not overall affected by that move, but yet you're still having to put that money up every single month. You're still having to do that. You're still having to keep reinvesting over and over again, because now you don't even own a stock. You own a portion and a piece of a stock, right? So with trading, this is where the beauty is. And so you hear me talk about being a financial advisor. And when I say financial advisor, that means that I took the Series 6, 63, I took the 65. So I took all the exams that I needed and was still not done testing, right? There are still other tests out there for advancement. There are still other tests out there to actually run offices, those types of things. So there were more exams and tests that I was going to take. But it's when I started seeing and removing the veil myself. It's when I started seeing you know that the average person goes back to work after 3 years of getting their retirement accounts. When you start realizing that our retirement platform that we actually operate under right now with the IRS codes and everything else was actually implemented. It was written in 74, but it was implemented in 75. I was born in 75. So when you look at that, and I say, and I relate that to my age because that makes me be able to relate that to my parents, to our grandparents. And you look at the way that they retire and you look at the way that they still live. Is that really the platform and the vehicle that you want to go down? Is that really the platform and the vehicle that we want to continue to participate in blindly? And this is what we mean about removing the blinders, because so many people have bought into this. So many people have done this. And yet now that they're in this retirement age, now that they're able to do that, they're still working. They're going back to work because this is not something that they can live off of, because you really will see how much money we leave on the table. But yet that company that you're paying each month, that company that you're giving that money to, they are trading. This is what they are doing. And so it's important to know that, and it's important to understand the other side of money, right? That's what we're talking about today, is understanding the other side of money. So when you're trading, you take advantage of both the rising and the falling markets, right? You're actually able to enter and exit positions over a shorter time frame. So the penalties are not there on me getting my money. The penalties are not there on me obtaining my funds. I can't touch it till a certain age. And then when I do reach that age, it's not what I was looking for. It's not what I was expecting, right? And yet you are able to trade everything: foreign exchange, stocks, commodities, whatever instrument you want to trade, you can do it. And you actually can apply to BYOB cash out. So you can cash out on everything. And the goal is when you're trading is to generate returns that outperform buying and holding. So when you're trading, you want to outperform the investing world. You want to outperform investing. So if someone who has taken your money, I want you to think about this for a moment. Someone who has sat down with you, and yes, that was me, and a lot of us do not know any better. And that's why I'm so passionate about what I do. That's why I'm so passionate about being on these calls. That's why I'm so passionate about making sure you know how to trade and know the skill set for yourself, because I was that person that would sit down with you and go over your accounts and prep you for retirement. I was that person. And a lot of us do it blindly because we are also caught up in that same world. But if you want to put your money, if you want a higher return, where do we tell you to put it? We tell you to put it in foreign funds, the foreign exchange market. But yet it's still subject to the exact same thing that it was subject to before. And then also, think about it. When I say hidden in plain sight, when I was a private in the military, I did military payroll. So military payroll, but yet there was a booth exchange that when a soldier wanted to go into the economy, in the German economy, they could come exchange their currency. And so you're literally trading at that moment where they're selling the US dollar and they were buying the German Deutsch. So that was the currency at the time, but that's what was happening. And a person like myself on the other side of the counter was buying US dollar and selling German Deutsch. We were trading. End of the day, profit and loss for the government. End of the day, we had to balance that out. Profit and loss for the government. So now we can do, right? They tell us that what we can do is invest, but yet you literally have the opportunity to trade it the same way they do on every level. in every currency, in every commodity, everything that's out there. So you can buy low and sell high, right? Same concept as investing, right? But then you can also sell the market, short the market, right? Which is where you sell at that higher price and then you buy the same way I just explained that currency booth exchange, right? So you actually get to profit, you sell it high and you profit at a lower price. So I know that's not the concept that we normally understand, and it's not the concept that we normally operate under, but that's really what it is, okay? So, what did I just do? So that's really what it is. So the point, investors are content, right? If that's you, investors are content with annual returns of 10 to 15% prayerfully, because that's high for an investor. That's high, right? So they're content with that. They're content. But traders, when you're trading, you can actually generate 10% each month. So do you see the difference there? Do you see the difference? So when you put your money into those accounts, they don't just sit there. They print the paper out like they're supposed to. They send it to you in the mail, but they're trading. Your banks, all of them, this is what they're doing with your money. And you have to know that. You have to be aware of that, because that's what's happening with your money. So I want to show you something. When you're investing, because we talk about can I get access to this and what can I do? When you're investing, here are a few examples, right? Here are a few examples of some of the accounts and just a few examples of some of the things that you can actually purchase. I mean, we talk about stocks, right? You talk about stocks. So Twitter, you want to invest in Twitter, it's going to cost you $39.67, right? That's what it's going to cost you to buy a share. But when you look at the movement on the chart and the movement on the market, which is where we're actually about to go, when you actually see that, you're going to see, okay, it's recommended. Now, this is what's recommended off of the site, that you at least purchase 800. And when you do that, you're looking at $31,736. And it's the same thing across the board. When you're talking about Apple, right? Look at how much an Apple stock costs, right? So when you finish your recommended investment to actually make a profit, you're talking about $246,000. Who has $246,000 just laying around? Because if you had $246,000 laying around, but see, understand, in order for me to know if that's a good investment, right? Where is my take profit? Where did I close out that transaction? And it's the same for all. I mean, look at the examples that you have. So how when you worked for Apple, it was $12 a share. Now look at it. I mean, it's gone up. But where do you know? But even if you would have got it at $12 and it's now $224 a share, is it really a profit? Is it really an asset? Now, once again, I'm not getting into the dividends. We're not digging that deep. This is surface. Remember, this is still an open transaction. This is still open. So it has not closed out yet. It has not closed out. So you want to make sure that you understand that. So you definitely have to, when you look at all of that, right? You have to see that. You have to know that. And then when you talk about trading, you're looking at the fact that this is a $325 initial investment for the education, right? Look at the amount of money at the top. So you should never be in a perspective of, no, how much money I have to put into myself or how much money I have to do. You should never be in that position. You should never be in that perspective, right? You should never be there. But what you want to make sure, that you are looking from a perspective of $325 investment into myself, a $325 initial investment for the education and the same type of tools and resources that your banks utilize. And so you want to make sure that you literally are taking advantage of that. And then you get to fund your broker account from anywhere from $100 to $1,000. This is where you actually can fund your broker account. So already to learn a skill set that'll pay me today and not in 40 years, right? Already what you have is the opportunity to make sure that you are already starting on top. You're already, and once again, no, I'm not anti-investing. I'm just pro you having the right information. I'm just pro you having the right information. So, you never heard the investing versus trading breakdown. And guess what? We are not done. So if you could just give me a moment, let me change my screen share, because what I want to show you, I want to share with you how you can think like a bank, act like a bank, and literally become your own bank. You're going to see this on the chart. So just give me just one moment and let me change this. Give me just one moment here. Okay, it's pulling up. It's pulling up. I apologize for the delay. Okay, get my screen. Haha, you said $325 on one hair appointment. See, that's exactly. Okay, here we go. You should see it. If not, we're gonna try this again.
As he's pulling this up information, folks, I want you to, if you're getting some tremendous value, and our whole purpose is to, under deliver and over promise. If this is beneficial, if this is changing your perspective, well, really what you have your hands on, I need you to drop a 777 in the chat. If this is changing your perspective, and prayerfully, what we want you to be able to take away from this conversation, for those of you who have been concerned about not wanting to expose other people to this information, imagine your whole financial understanding to this point and what you've been able to glean and grasp thus far, and having this perspective. Can you imagine why we stay excited about making sure that our 1 million families are financially educated and impacted? This is the level of information. This is what collectively we all have, and why it's so paramount and so important for you to have the right understanding. But now that you're beginning to get the right understanding, how essential and how important it is for you to have a conversation tomorrow or tonight with your children, your grandchildren, your nieces, your nephews, your coworkers, on what's been happening to all of us collectively. And now you have the power, and you've been called to be the great liberator. So once again, if this is beneficial to you on any level, I need you to put another 777 in the chat. Back to you, Ms. Dyer.
Thank you so very much. Now, what you see on the screen, right? I wanted to break down some of the stocks that we actually just looked at. And what you see on the screen is actually GM, right? We're going to talk about them because they're in the news, right? And they're a US 30 company, and they are one of the best, right? So we think it's been around. Now, what you see, now this once again is the BYOB cash out, right? So this is the strategy that we use. And what you actually see is I have this on the monthly chart. I have this on the monthly chart. So looking at this on the monthly chart, okay, you see this, and this is where, look, way back in December 2010, right? So you'll notice when these actually hit, or when it, whatever reason is when they got on there. Some of them will go back to 1960 something, or some of them actually started 2004. So just different time frames of when this hit. So it could be when it went public, it could be when they started trading it, it could be just different reasons. But let's look at it from the perspective of it on now. This is when you would have been able to buy it first, right? When it was available to the public, to pretty much all of us, this is when you would have been able to buy it. So remember, we're talking about an investing perspective. First, I want to show you investing. So whether I bought one share or I bought the recommended amount of shares, right? This is when I could have started. Now remember, you are holding. You are not closing your transaction. So you would have bought it. Now you don't sell stocks from the when you're investing. You only can short the market, sell the market when you're trading. So if I would have purchased some stocks at this price, remember on the side, this is a price. Whenever we're trading, we look on the side and it's called a call price, right? So when we get the alerts, when we get these alerts, you see it's a called price. So along the side is that price. So because we're dealing with a stock, this is actual a price. When you're dealing with foreign exchange, you're looking at a pip because it's 4 decimals behind, it's a fraction. It's 4 decimals behind the point because we're dealing with a fraction because that market is so huge. So we're talking about $6.6 trillion a day. So the market is huge, right? So now look what you see. You actually see this is where I would have bought it at this price, $36.31, right? $36.31. Now, initially it would have dropped. So I would have lost money. So this is when you see people, quote unquote, spazzing out, right? People, oh my goodness, what's going on in the market, right? The people that are commenting on Facebook, the ones that are on the traditional type news, because they don't really have that foundation of what's happening, right? They don't really have that and they don't understand it. So we see, because remember, we're taught from an investing standpoint. That's what we're taught. We're taught to invest, but instead of looking to purchase, instead of looking to trade, instead of looking to maximize our money. Now remember, GM, they have they got somebody, they have people trading for them. All insurance companies, institutional investors, I don't care who it is, they got somebody, your bank, they have somebody trading your money. So then it actually would have came up. So it would have rose 5.37, right? And if you're now, we know just from what we said that this is not, when you're talking about points and dollars and prices, right? We don't refer it to pips, but I'm gonna talk about pips just so you can see, because pips is our general conversation, right? So on the side, you see that says 529. So look how many quote unquote pips it dropped, which is really 1694. I'm not getting away from what I normally talk about, how I teach you, but I want everybody to understand, because we're taught pips so much. I just want you to see the movement, right? And then it comes back up, and now here we are 10 years, almost 10 years later. It's not a full, but almost 10 years later, and we're in the exact same spot. We are in the same spot we started from. But where did you profit? Where did you profit? What money did you make? So you might have got money off of some dividends, but once again, we're not going to break all that stuff down tonight. But where did you overall, where did you profit? So remember, my portfolio might look good, right? It might look good. The person that got in late on this one, right? They might not have got in here because they felt like it was not a good stock to get into because it dropped. Or somebody might have been smart and say, you know what, I'm gonna get into it because it dropped, and I think it'll go back up. But even still, look at where it's at. So you got in, or even if you miss this push, guess what? It's still, it's consolidated, and it's been consolidated for years, right? In the big picture. And look how it follows the same market structure. That's a double bottom. Looks like a W, right? Market structure. That's what that is. That's market structure. So this is the exact same thing that you do, but yet you could have traded. You could have sold the market, right? I could have came up. And remember, this is the monthly chart. So this is for a swing trader. But if I would have come down to the 15-minute chart, well, we all know how to trade. Look at that, BYOB cash out. right? And you can actually take profit. So you actually come out on top a lot more, a lot higher, right? And now I want to show you, let me show y'all, right? Uh-oh, let me pull it up. Make sure I'm pulling up the right thing. So now this is AT&T, and we're gonna look at that one from that same perspective. Let's look at that from the same exact perspective, okay? Remember, they want you, what do they want you to do? They want you to invest. They want you to only invest, okay? But doesn't this look like the same market structure? The same thing, right? The same thing. So yes, it'll be on YouTube. And yes, they do have brokers that allow you to trade this. So now I'm gonna go back. Actually, let me pull this up on a monthly as well. So let's go back. When did this one get? 1984, right? So did anybody get in at the ground floor, right? Who got it when it first hit the market? Then we're gonna talk about the people that got into the euphoria, right? Let's talk about those people. But take a screenshot. I want you to get a mental snapshot of this right here. A mental snapshot, real quick, before I go any further. This is when this first came out. I want you to grab a mental snapshot. And while you're doing that, I want you to keep looking at it for a moment. This is not a trick question, right? It's definitely not a trick. I'm not playing a game with you, but I want you to look at that for just a moment. And while you do that, let me see here. I'm gonna share something else with you, but I need for you to get a mental snapshot of that. Okay. Now I'm gonna change my screen. Okay. I'm gonna do a new share. Now you should have a new share. Now take a look at that. What do you see? You should see the market psychology is what you should see. Market psychology. And do you see, and I'm gonna go back to the other screen, but what you see is disbelief, right? This is when it opened, right? And this is time across the bottom, and that's your price moving up on the side. So this is when it first hit the chart and it moved up, right? People got excited about it. Optimism, belief, thrill. They hit euphoria, okay? It hit euphoria. And then it started coming, they got complacent and it dropped. It dropped, right? And then they started blaming the market. They blamed the government, and it kind of went over to depression and disbelief. Now let me change my share back. I'm gonna change my share back. Now what does that look like? The psychology of the market. The psychology of the market, right? The exact same thing that we looked at before. This is the exact same thing. And so it moved up, right? People were in complete disbelief. Complete disbelief. And then euphoria, got complacent, right? Got complacent, and then it dropped. Panic, and then it moves over into depression. It follows that same cycle, that exact same cycle. And you see how it kind of peaked up a little bit, kind of went through the same cycle again, but not as big of a cycle, right? It did the same thing. And now, so the market is doing what it's supposed to do. The market is always going to repeat itself. But what I want to show you, right? What I want to be able to share with you all is, and no, I do not have that posted in there. But what I want to show you all is take a look at this. Let's say you got in at the initial investment, right? Or you got in at the top, or you got in on this way up, on this rise, right? Now this is way back. Look at the date on the bottom. That is December 1983. December 1983. But I come over would have made a decent investment, if we can call it that, because remember, you're pouring this money into this every single month. You're pouring money into this every single month, right? Because you have to keep buying it over, because you didn't want to buy this and only have, right, $28, because that's the only thing you would have had. So that's why you have to keep investing every single month. But look at the person that got in on the top, right? When you close the transaction, did you profit? When you needed this money for that college fund, when you needed this money, when you needed it at retirement, did you profit? Did you profit? Because I got in up here. But look at where the price is. The price is down here. So did I profit? This is why buying and praying is not really all you should do. This is why people get frustrated with the stock market, but yet they're frustrated, but we're continue to be fed over and over and over again. Invest. Whoever told you about trading? Because that's what they're doing. They're trading your money. That's what they're doing. So it just continues to work like that over and over. So how many shares did you have? How many shares did you need? Right? How many shares did you need to show a profit? So that's why you're continually having to repurchase, right? They get you with the stocks, the stock splits, and all of this other things that you're learning, but that's what this is. So now, one of the other one, I want to show you one more, and then just one more. So same thing. No, they don't. Same exact thing. So you're looking at it, and I have it on a monthly chart. So it's the same thing. So if you look at where you got in on the ground level, okay, you got in on the ground level, that look where it is right now. So if you would have got in where it peaked, right? And these are well-known companies. These are companies that you would think that it'd be a great investment, right? Same thing, market psychology. See how that picture is the same. But and so I don't know if you were on the call at the beginning, but you just said 7%, and that does not even touch what I said from 10 to 15, right? 10 to 15. So when you actually break this down, right? You actually break this down. So and once again, I'm not anti-investments, but I'm about you having the right education. And what are you being educated upon, right? What are you being educated upon? So when you break this down to the 15-minute chart, I can actually come through here and I can cash out, right? I can come through here and I can cash out. And of course, the market is closed right now, but it looks like it's a trade setting up, right? Because it's been an overall sale. So same rules apply. I got my blue line that crossed over the red and a downward momentum. I have my red candle with a flat top, and then I have my PSR flip, and I can cash out, right? I can cash out. So that's the movement. That's what we're here to share with you. That's what this is all about. So of course, in a perfect world, you buy the stocks, they go up. But this tonight is about showing you the money that you are leaving on the table. It's all about showing you the money that you are leaving on the table. Because when you invest, that transaction is not complete until you retire. That transaction is not complete until you cash it out. But when you trade, you can actually trade, compound, and you can actually trade on everything, right? You can actually trade on everything. When you look at the stocks, all of this is out there. So all of this is out there. So you look at everything, futures. So Forex, of course, right? Look at the metals. Look at your cryptocurrency. Look at your indices, right? Just look at what's out there that's available to you to be traded. So it's all about making sure you got the right information, It's all about giving you what's necessary. And I do want to share one more thing with you, because very important, right? So when you go back to the psychology of the market, right, we're often taught, right? I just mentioned something, and what I was mentioning was about you mentioning you actually. No, I don't want a new share. Hold on, sorry. It's just about mentioning to you that you want to make sure that you are taking advantage of this, but we know that we buy and have to hold it, because the only thing we know is buy. The only thing we know is buy and sell later. That's it, right? But what you get to see right now is you get to see, when I talk about sell, when I talk about buying and selling the market, this is where this is important, because what you just saw was the fluctuating of the market. What you just saw was the fluctuations of what was actually happening with the market. And but we all have to buy and hold it, right? Buy and hold it exactly 10, 20, 30 years from now. But they're riding it up and down, trading, while the only thing you're left with is the ability to buy and hold it and just pray that you selected the right stock, or you selected the right mutual fund portfolio. That's what that is. So right here, you have the currency strength. So you have a base currency and you have a counter currency. When you're dealing, of course, with the stocks, you'll see that you have the stock. But if you look at like the indices, or you look at anything, they actually have the US dollar on the back end. Or I've even seen where you have something compared with the GBP or something, but you always have a base currency and a counter currency. So if I'm going to buy the market, right? Remember, you're going to either buy or you're going to sell first. You are one of those people on the opposite end of that transaction. You are one of them. And being that you are one of them on the opposite end of that transaction, the question is which one are you? Do I buy the US dollar and sell the German Deutsch? Which one are you? And I know it's not a German Deutsch anymore, but that was just where I was when I did it. But they had it then. So do you buy the US dollar? Do you sell the JPY? Which one? So based on the currency strength, you have the US dollar. If it's stronger, US dollar JPY. If the US dollar is stronger, then the market will buy. The market will rise in value. So when you're comparing, I know we get caught up in, okay, this one costs this much, this one costs that much. Which one is stronger when you're comparing the two, right? Just like we had GBP pairs, because of Brexit, we knew they were going to drop. So GBP was the weaker currency. And so when that's the case, if GBP is the first currency, the base currency, and for example, JPY, or in this case, USD and JPY, if the first one, USD, is my base currency and is stronger, I buy the market. If it is weaker and my counter currency, which is my second currency, is stronger, then I sell first. I sell the market. That puts you in a position of, at the counter, I'm at that currency exchange booth, and I need to sell. That's what that is. That's why currencies, I know people say, okay, you buy and sell the market, you buy and sell the market, but you don't know why, or you don't know what you're doing, or you don't know what it's all about, right? So this ought to help you with your conversation. This ought to help you with your understanding. This ought to help you with to understand you are exactly in the right place. You're doing the right thing. You are definitely, you're here and you're in the right position, right? So you do not want to miss out on that. And of course, it would not be complete if I didn't share one more thing with you, right? It would not be complete if I didn't share one more thing with you on this call, because we want to make sure you are in a position to where you win completely, right? So if you're getting value while I pull this up, if you got a question or if you're getting value, drop it in the chat, because I want to share, I would definitely want to make sure that each and every last one of you understand, and you grasp it. You grasp what we're doing and why we're doing it. So I got that. Oh, you got a 7? Hey, I'll take the cash out. I'll take the cash out, the money symbol, right? I'll take that. I'll take that. I'll take that. So definitely will take that. Now, with the currency strength, as I'm pulling this up, when I'm training, I think you guys were taking that to the extreme. I don't know if you, I'm not quite sure if you know, how long you've been plugging in on these calls, but we used to try to go pull a currency strength. Understand that the market, the currency strength is read from the market and not vice versa. The market does not read the currency strength, right? Understand that. So because of that, what I began doing is teaching you and sharing with you time frame confluence, because the market reads the currency strength reads the market and not vice versa, as I'm saying. So I want you to understand, I definitely want you all to understand what you're looking at. I want you all to be able to understand from a perspective of understanding your base currency and your counter currency. And I use the currency strength to find out, you know, I use that to find out what's the strength of the market, right? Not to go check every trade. That's why I stopped pulling it up on the calls, because I don't want to check every trade and then not take a trade or get confused. But that time frame confluence is so important, and that's why we do it from that perspective. So what you see right here is Google, right? And I cannot take a trade on it right now because the market's closed, but this is a broker that actually allows you to trade, right? This is a broker that actually allows you to trade from that platform. So what you see is actually a broker, and you see that this is Google. And so I just want to share with you, and you see now, you don't trade from here, you trade, of course, but when I set my platform up, I always wanted to be as close as possible, right? And on the MT4 on your computer, this is what that looks like, right? This is what that looks like. This is actually Crypto Rocket. So this is what those Hikinashi candles actually look like. And so I still like looking at them on the vibrata just because of that. But if you see, I'm on the 15-minute time frame, right? Haha, sure do. I'm on a 15-minute time frame, and this is Google. And that's, so I have that pulled up. And you notice it follows those same exact, the cash out. When I tell you the cash out works on everything, it works on everything. So this is what you're looking for. It definitely works on everything. So it's just that this only, for stocks, it only works on that market, right? When it's actually open. And so guess what also works? That trailing stop loss. So what I'm gonna have to do though to kind of show you that is just, I'm gonna pull up a GBP pair, right? Now we still want to pretend like, you know, we still want to pretend like it's a stock, right? It's a stock, but I can't show you a trailing stop loss. I cannot show you a trailing stop loss if I was actually trading it. So now I'm not doing an analyzation. We only got a few minutes left on this call. So I'm gonna just click sell. We're just gonna sell real quick. And we're gonna sell low, of course. And I come to my stop loss, right? So I always go back and modify. But where we are right now with this call, you know, I'm gonna end up closing this trade out. But I want you to understand the trailing stop loss. Now you see how this is in points, right? They're using every single digit that's on there. They're using every single digit. So if I put 15 points, that's gonna be 1.5 pip. But it has to account across the board. So and like I say, that's with this broker. It actually has to account across the board. So you would actually have to do 150 points, and of course it's on this broker, but you have to play with it and understand it. So when I tell you to do a trailing stop loss, and you want your stop loss to be, let's say you're doing 30 pips or 20 pips or 10 pips based on the movement, or you're doing points like the US 30, for example, you're doing so many points, right? Behind it, you did. Now, of course, the US 30 would be points, right? Because we're talking about points. But they're using every spot on here. So I would have to come customize this if I was trying to do 20 because I wanted to remain behind my PSAR, right? So I'm gonna just use a 20. And so then I would have to put a 200 in there. But if it was 15 pips, then I would actually have to put 150 in there. So that's that trailing stop loss. And then once it activates, right? Once it activates, and this is extremely helpful if you're going for more than 10 pips. Of course, if I'm only doing 10 pips, then it's not going to activate until I'm 10 pips in profit. So if I'm only doing 10, if I just did 150, so I'm doing 15 pips until I'm 15 pips in profit. So if you're trying to trade off the hour time frame, or you're trading the points, so like we're talking about on the stock market, or you doing any of that, and so you need your stop loss to be 30. If let's say your stop loss is 30 behind it, right? So I want to come back and customize this. I can change it, and then I do 300, right? So that 300 would actually be, and of course you got to practice it with your broker, but of course that 300 would be 30 pips behind. So if I'm doing that hour, or I'm doing a 4 hour, are you taking it to those high, or you want more pips or more points, then that's what you want to do from there. So that's an example. Like I said, I couldn't show you, but you see Apple, same thing, right? This one would have been a good one to actually go look at right now. So you can trade Apple, right? 5-minute time frame. I mean, it's all the same. So investing versus trading, you know, I'm gonna tell you now, I will not write another retirement plan. I won't do it. I'm gonna help you trade, and that's why I'm so passionate about what I do, because I have to understand. I want you all to understand. Haha, Cece said, "Oh yes." I want you all to understand why this is why I'm here, because you can be so much more profitable. And as Dr. Byford always says, I'm not anti-bank, I'm just pro your household. So I'm not anti-investment, same philosophy, same mindset, same concept. I'm not anti-investment, I'm just pro your household. I'm pro you having the right information. I'm pro you having the right education. I'm pro you understanding what you're doing and why you're doing it. Then once you have all of that, then you can make your own decision. You can make a decision on how you want to move forward. But when you make that decision, you're making that decision from an educated standpoint, right? You are making that decision from an educated standpoint and not blindly because your blinders have been removed. So you guys, you have a blessed evening. And I'm going to turn this back over to Mr. Rogers. Mr. Rogers.